Aveek Mitra joins in on the show then. So let's talk about the market. Aveek, hi, afternoon. What is it that you're sensing about the market? A lot of the BJP victory priced in already. Where do we head from here? Do we consolidate? Do we dip a bit? Or do you think there are only fresher, blue sky territory ahead of us now?
I would really look into the earnings, because I think when I came last time also I said that I am not really focusing on election much, but obviously that a clear mandate and a clear path for the government to do whatever reform they would like to do to perform without much of a resistance from any side. So that obviously can give us a long-term bullishness about the market's direction. But at the same time, I would really look into the earning growth and the earning momentum in the coming 2 quarters, and how the liquidity crisis is solved, how the interest rate is reduced in the forthcoming RBI meet. And this kind of stuffs actually will make us decide on whether this kind of excitement is temporary or really structural. Because for making a structural bull market, a lot of exchanges I expect, most in immediate term as well as in short term as well as in long term. So unless those happens, it is very difficult to comment whether we are looking into a blue sky scenario. But yes, overall I am positive from last 2-3 months. I think whenever I came to your channel, I have informed that.
Okay, sure. A lot of focus continues to be on the financials, Aveek, in terms of, them being the drivers of the economy going forward. Would you agree? Do you feel there's still perhaps some speed bumps along the way? What's your sense?
I think that this NBFC story needs a kind of resetting, because the issues which has cropped up from the liability side is something which needs a structural solution. So from their perspective, I think that there will be a lot of new regulations possibly maybe coming, or maybe the NBFC's business, a portion of that business will go into the private corporate banks. And also on the asset side, if you notice, I think too much it is personal loan heavy. So I do not really know if the employment or the salary level or the earning level does not grow, how the people who have taken those personal loans significantly would behave in the days coming. So I am really not very bullish on NBFC sector for the time being, but there are good companies to look into within that space. So we are keeping a track of it. But if you say that beyond some Bajaj Finance and stuff like that, we are really looking into an NBFC space, no, not really. And anyway, we were always very light on NBFC and financials, because we do not understand the variables actually at play in this sector, because both asset side and liability side of an NBFC business is unknown unknowns, and sometimes it is unknown to the managements also. So our exposure always remains in the range of 5-10%, though we know that it is the perennial multi-baggers, but we try to err on the safer side on this area, on these issues.
Kunal, wanted to get in your take on Zee Entertainment after the kind of earnings that it delivered, news announcements with the stake sale, perhaps taking place by the month of July. It's really had a roller coaster ride so far. What is your view at 377?
So I think the short-term charts suggest that the stock should scale up higher from current levels. Maybe a dash towards a 390 to 410 range could be a possibility, or a strong possibility, given the the bullishness on the short-term charts for Zee. But when you look at it over what has transpired over the last 3-4 months, 4-5 months for the stock, 2 times the stock had seen sharp selling pressures, and the stock had formed a bottom first time I think at around 300 levels, and the second at around 310-315 levels. So both of them suggest that the longer term structure is dented for Zee, but I think just from a short term view, you could look at a pop of another 50 to 20 rupees on the upside for the stock.
Okay, we have Mr. Rajesh Agarwal joining us as well, MD at Insectoris India. Mr. Agarwal, thanks so much for being with us. Let's first just get a better sense of the earnings this time around as well, and really what were some of the key factors at play according to you, if you could just run us through the highlights.
Yeah, this was a very interesting quarter actually. Though generally for the peers there are mixed responses, but I believe since we are on an innovative path actually and trying to introduce new technologies, so we are getting a very good success with our customers. So this quarter has been quite interesting. We have grown the revenue by almost 18% in this quarter, touching the number of 199 crores. And as I have always promised that we will be improving our bottom line, because continuously the focus is on innovative technology, the new products from our R&D, and also the focus is on the Japanese products. So the EBITDA has grown to 30 crores, almost there is a jump of 57% in this quarter. And if I look at the year as a whole, the revenue has grown by 11% and touched 1192 crores. And the EBITDA margin as a whole has touched 188 crores, which is a 25% growth. And if I come to a whole year PAT, it is 122 crores, almost 45% jump from the previous year. So I can say that we are trying to deliver whatever we are committing to our investors, and of course we are bringing the new technology for the farmer, and we are getting a very beautiful response from these farmers, because the acceptance of these new products is very high. Like if I talk about like last 6 years, then we have introduced many new products actually, and if I look at my total business share from these introductions, it is more than 45% business is coming out of the new products which we have introduced in last 5-6 years.
Sure. So can we also see further margin improvement on the back of this favorable product mix that you've described?
Yeah, continuously we are focusing on these new generation molecules, and this year also we have already identified about 10-11 products which are to be introduced in various phases. So in the first phase we are going to launch about 7 products which are going to come in the month of June. So I can safely say that we are working for a top line growth of about 10% with a better growth in the bottom line. Like when we started this about 4 years back, then I said that we are working on a path of about 1.5 or 150 basis points improvement year on year. So I believe so far we are able to achieve that, and in future years also I see that coming. At least I can talk about the next fiscal. I believe it happening again.
Okay, what about the status of development of innovative molecules, geographic expansion? How can we see some of that increasing revenues going forward?
Like this year again I have a target of introducing 10 new products actually. So every year we achieve a sales growth of about 10 to 15% from these new generation molecules, because at one stage we are introducing new technologies, and at the other position we are also cutting down or toning down our generic products actually, which are not doing very well in the market. So we are targeting a overall revenue growth of about 10%, but here in this 10% growth, the contribution from the new generation is not less than 15%, and 5% or 6% it's get toned down due to our strategy of removing the old products which are not contributing much to the business.
Talk to us also about the growth in the Maharatna category and the contribution of the green label category as well.
Yes, there is growth in the Maharatnas, and green label is more or less stable actually. It has come down if I talk about the exact the contribution which is coming from this particular product. But here I would like to mention that when I am doing the generic products, generic means like green label was the product which we manufactured in the country for the first time. So when I take a TIM registration or technical for indigenous manufacture, I open the floodgates for the market. Lot of companies will enter into that molecule. The advantage is farmer get it at the cheaper price. When the product is made in India, he has the advantage that the normal farmer or a common farmer gets the access to the new technology. And we get an advantage because we are the first introducer in the country, or the first time manufacturer in the country. We have got the budgets to develop that product and take that technology to the market. And we have specialized ourselves in taking this technology to the farmer. And I believe that the network and farmer, our customer base, has always appreciated our move of bringing the new technology in his reach. So we'll be growing in such products, and along with this we are also going to introduce the patented technologies through our R&D center, and of course there will be certain Japanese products also which are on their way.
Okay, Rajesh, great to have you on the show. Thanks much for taking the time out and highlighting how your earnings have been. We've been talking about Diwan Housing and the kind of weakness surrounding this stock. Remember, the MHA had issued a lookout notice against the promoters. But Ruchi Bhatia, my colleague, joins in with details and the latest update on this one. And Ruchi, I believe the DHFL promoters have issued a clarification. What does it read?
So we are given to understand that after that ET Now news break, wherein the Ministry of Corporate Affairs had asked the Ministry of Home Affairs to issue a lookout notice against the promoters of Diwan Housing Finance Limited. Thereafter, the exchanges have sought clarification. We're yet to hear from Diwan Housing Finance, Aisha, but so far the exchanges have sought clarification on the back of that ET Now news break. We did see a massive reaction in the stock as well. At one point of time, the stock was down almost 7% in intraday, and if you see, there is a massive value erosion in the last 1 year for Diwan Housing Finance Limited as well. I have been speaking to some top officials at Ministry of Corporate Affairs. There are 20 such cases where lookout circulars have been given in the last 2 weeks, 2 to 3 odd weeks, and Diwan Housing Finance Limited is one of the companies. This is really a preventive measure, so to say, to ensure that these promoters do not run out of the country. We do not see a case like we did see for Vijay Mallya as well as Nirav Modi. So this is a preventive measure, so to say. The Ministry of Corporate Affairs has also found certain shell companies that were associated with DHFL. So I am given to understand that the investigative agencies will be looking into all these issues, but as a preventive measure, so to say, these lookout notices have been given. Now the exchange is also seeking clarification from the company.
Ruchi, that's the latest coming in on DHFL and the entire saga there. The MHA now issuing a lookout notice against the promoters there. Okay, we're still in conversation with Aveek Mitra as well. Aveek, let's get a sense of really, what you're focusing on in the markets then going ahead. There's been some, some attention that's veered to infrastructure, construction, real estate. Within that pocket, would you take a cyclical route? Would you look at specific themes like maybe a cement? What would be catching your eye?
Yeah, in this space, actually, we, as we discussed previously also, we have focused into cement and infrastructure, and we have actually zeroed in on few companies. I can, without getting into the specific one company, I can give you a range of companies which we find that people can look into. It is not an advice or recommendation. It was like PNC Infrastructure, KNR Construction, Dilip Buildcon. I think these are the same names. Actually, we are gradually seeing that when the opportunities come, a right value comes, we keep adding it to our portfolio. And same is in the areas of cement sector, because cement, I think every company is showing that, specifically the larger companies is showing that they have got a pricing power back, and also the costs and the prices are matching. And if we expect a huge infrastructure and rural housing push, we find no reason for cement not doing well, especially when I think in last 5-6 years, if we assume that the economy has grown at 7%, so almost 40-50% growth in the economy has happened over 5 years, where the cement production addition was not commensurate to that. So even if there are some here and there small expansions or small capacity additions, we think that cement pricing power will come back again in this area. KCP Cement, Sagar Cement, JK Lakshmi Cement, JK Cement, Birla Corp. These are the kind of areas. Apart from the large ones like the Odisha Cement and Ultratech, we are focusing on. So these two areas we are looking into. Real estate, no, not yet, because we think that we would like to see more clarity in policies and issues which are really besorting the sector to be solved, or there is an effort to solve these through the liquidity crisis and all, and then we will really look into it. So we have got a list of stocks, but there is no investment from our side as yet.
Okay, I just want to mark what's going on with the banks, and even if we pull up, the sort of 1 month chart or a 1 week chart for the Nifty Bank, it's been quite a heady run up that we've seen, particularly off late, post the kind of election verdict and the euphoria that we saw on the street. So why don't we just pull up that Nifty Bank 1 month chart, and while the banks have been taking the lead and showing you quite a bit of outperformance, it's been the IT index that has taken a bit of a backseat. There you have it, that's the Nifty Bank, and it's IT that has been a bit of an underperformer. As we speak right now, the Nifty Bank has flattened out in the red, and you've got IT as an index which is showing you a role reversal, and finally it's showing you a little bit of green, up 187 points on that index. Dr. Narayan, what's your take on these two key indices by way of trends?
Well, I think IT was, getting drubbed a bit, and today there seems to be some slight amends. Not as though, the leader stocks are up and running, but they are certainly beginning to look up, particularly stocks like HCL Tech, and there was a modicum of interest back again in Infi. Tech Mahindra has been one of the stocks which has improved. So is that mainly because the rest of the market has been dropping a bit and people are seeking some amount of safety in these names? I really wouldn't be able to say as of now. But the fact of the matter is that IT is certainly something which is beginning to look up. So we might see that area remaining, afloat a bit more. That is what I would gather. So if I'm inclined to buy into some IT names, I think currently perhaps Tech Mahindra and HCL Tech lend themselves forward as a buy.
Aveek, before we let you go, just wanted to understand some of your specialty chemical themes as well. And I can see that you're betting on an SRF or Thirumalai chemicals. Do you think these are ideas which can be purchased for investment even now from a longer term perspective?
SRF, I think if somebody wants to invest the SRF, people can look into it as the way they have changed their business and the way they are creating a leadership position into the area. So the stocks where we have invested is SRF. Yes, Thirumalai we have invested recently when the stock has really fallen very substantially, and we feel that the spread which the company used to enjoy with their product vis-a-vis their raw material squeezed substantially. But since the company is shifting its plant nearer to the customer, we think that coming days, and this is a very, very critical requirement product. So we feel that over a period of time, we are comfortable with the safety of this company. Other investments which we looked into are Transpec and Gujarat Fluorochemicals. So these companies, people can look into it, because I think that over a period of time, surely there is a structural shift which is happening and which is being discussed all over the place. And even though we really do not know the contours of the effect, because when the Chinese, some of the Chinese companies close down, it may affect the raw material sourcing of some of the Indian companies. But given that also, the real possibility of India becoming an alternative source to China is real, serious, and there are companies like an SRF, like a Transpec, like a Gujarat Fluorochem, like a Navin Fluorine. These companies that, like a Vinati Organics, these companies are really catching up and trying to meet that challenge in a very, very noteworthy way.
Thanks much for joining in and sharing with us your outlook on the markets as well as your individual stock ideas.